Welcome to our weekly Forex market analysis call, and this is in preparation for trading for the week of February the 12th, 2018. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. Okay, so to start off with, we will do our usual. We will take a look at our calendar, economic calendar coming up here. So during the week, first we have, last week we had Bank of England, we have Reserve Bank of Australia. So it was a central bank type of week. So that was last week. So coming up now, we do have MPC members speaking. So these will cause volatility because last time Bank of England was actually hawkish in their outlook. So they were talking about they were talking about a potential interest rate hike in November of 2018. So later in the year is when they were that's the guidance that they provided to the market. So that's why we saw the British pound jump up a lot based on that based on the conference there, or based on their guidance after we saw the Bank of England come out. So now that's done, but MPC members, so this is like the Fed members, when they speak, again, market is just looking to see what the central bank is going to do. So just looking for more guidance around that. That's why this will be important. And then same thing with Reserve Bank of Australia. We have assistant governor speaking. So as a result of that, there will be some volatility. Going into Tuesday, we have CPI numbers for British pound. So this is your inflation number. Looks like they're expecting it to drop a little bit, but the inflation has been quite high for British pound here. So this is good. So as long as the inflation numbers stay on track, so the Bank of England will stay on track to raise rates. If the inflation drops, then the market will start thinking that they may not raise rates like they have suggested. So that's what we have to watch out for. That's why the CPI numbers are very important, especially now that the central banks are changing their stance on the monetary policy. So these numbers will be very important going forward. And then we have inflation, again, CPI numbers for a New Zealand dollar here, expectations. So that will be important for that. Going into Wednesday here, we have Weidman speaking. But other than that, we have a flash GDP for euro. Not a whole lot in the London session. Into the US session, we do have CPI numbers and retail sales numbers for the US. These numbers, again, are very important because central bank will focus on these when they're talking about making any monetary policy changing. So Fed essentially said that they're on track for raising rates again this year. And if the numbers stay on track, it gives them more sort of strength in terms of following through with that. And if they drop, that will be negative. That will have more of a negative impact because inflation is a concern for the Fed right now. So they need to really make sure that this actually stays on track. And then we have crude oil inventories will be important for Canadian dollar here as well. And then Australia, we have employment numbers, which will be important there. And then PPI numbers for the US. And we also have ADP non-farm for Canadian dollar here that will have an impact. Again, these ones, Empire State manufacturing numbers, Philly Fed manufacturing numbers, these are also important because they translate into retail sales later on. And going into the evening here, we have both news for both New Zealand and Australian dollar. These will have an impact, especially when there's RBA. Any kind of central bank will definitely have an impact on or create volatility, at least for that particular currency. And then going into Friday, we have retail sales and building permits. So all in all, this is a better week in terms of data than we saw last week to be, with all the different central bankers speaking and so forth. So this is slightly better in terms of not getting too disrupted by the news events. All right, so let's move on to our charts now. we will start with euro dollar. So last week we were looking for things to drop, and we have seen that. Now we have a very nice this evening star formation for the euro. So very nice, solid bearish candle close. So for euro dollar, the bias is to the downside, and the type of move that I would be looking for would be something like this. So looking for a bit of a push up, test into this 123.30 level potentially, and then a drop. So the first target will be 1.2160-ish level right into here, this previous support and resistance level. Second target would be 1.2100. And we could even potentially mark a third level here. So third level will be about 19. So maybe 120. So 1.20 or 2020 level. So those will be the three levels to the downside. First at 1.2160, then 12100 and 2020. Those are my three targets to the downside, but that's the kind of move I'm looking for, a bit of a push up and then a drop in there. So bias is to the downside for euro dollar. Pound dollar here, let's take a look. We have a nice bearish candle here. Next target is to the downside as well. So the target will be 1.3567, or let's put it at 1.3480 level. So that's what I'm looking for price to drop further. So in this case as well, looking for a bit of a push up into this pin here, and looking for a similar move to euro. So we have seen a big drop. So normally we would see prices pull back and then drop, and the target here is 1.3480. So bias is to the downside for pound dollar as well. Aussie dollar, we have seen quite a drop here as well. So the bias is to the downside in this one as well. And the target here, 76.20 will make a good target for Aussie here. So I'm looking for prices to drop. Again, because we have seen big drops here, I am looking for pullbacks and looking for prices to drop. So this is the normal sort of the move that I will be looking for. Biases to the downside, and target would be 76.25 for Aussie dollar. New Zealand dollar here, we had looked at these pins last week, and we were looking for a drop. So price has dropped, but since then on Friday here, it has pushed up, so which creates a pin for us in terms of the weekly. So in this case, the overall bias is still to the downside, but for some reason, New Zealand dollar has been a little more bullish than Australian dollar. So for this one, we have a very neutral candle close for the week. So which means price can go either way because we have pins on both sides here, small candle body, but overall bias is to the downside. So we would say bias would be neutral to bearish in this one. So the first target would be 71.80, retest of this previous pin, and then I'm looking for a further drop into 70.80 level, which is the bottom of this pin. So bias will be neutral to bearish for New Zealand dollar. So Aussie New Zealand may be a good trade to look at. So this one here, dollar CAD, we were looking for price to push up. So we have a nice candle close on the daily there. So with this one, now we are into an important support and resistance level. Last week, we were looking for price to push back up into the top of this level where 26.80 level. It's there now. Now we are into, if you were to remove all these extra lines, we see that price is back into this previous support and resistance level. So that's a strong support and resistance level. So this was a neckline of our previous double top here. So I would expect price to struggle a bit here, and we would also have to keep an eye on the oil prices. But for here right now, bias is bullish. So we are looking for price to move up higher. So I would be looking for a retest of this 26.80 level And once the price breaks through this support resistance level, only then I'm looking for price to go back into this previous range. And in that case, 1.2920 will be the target to the upside. But for now, first thing will be that price breaks through this 2680 level, because if the price does not break through 2680 level, then we could see price do one of these and it could just start trading in this range over here. So the bias is to the upside. First target 1.2680, and then once we see a clear break of this level, so something like this, then we can look for 1.2920 as the target to the upside. But again, caution would be warranted in that. Now we are into Euro Swiss franc. Euro Swiss franc looking bearish here. So in this case, looking for price to drop further, and the target would be 1.14 or 1400 level. So 1.1400 level. We had seen this compressed move to the upside, and now looks like we are unwinding to the downside here. So 1.1400 will be the target for Euro Swiss to the downside. Pound Swiss here, this is a bias to the downside as well, and looking for price to drop further. We are into this previous support and resistance level. So again, we need to make sure that we see a clear break of these before we start taking shorts here, because it could go in the other direction. So something like this is what I'm looking for. Biases to the downside, 1.2740 will be the target to the downside. So just looking for a further drop in pound Swiss. Dollar Swiss franc here, we have seen a bit of a push to the upside here, but overall the bias is still to the downside. So with this one, it could push up higher. So we are looking for price to, I'm looking for a retest of 94.60 level, and then potentially further higher up into this previous level here, which is the pin on the left-hand side. So 95.37 level, and then a drop like that. So biases to the upside for now in the short term, and looking for a retest of 95.37 level, this previous pin. And from there, we could see a drop. But again, we have to see a break of 94.64 level here before we go long on this one, because we are into an important support and resistance right over here, and we need to see a break of that. But for now, it does have, looks like it wants to retrace, because overall biases to the downside, but we may be looking at a little bit further retracement for dollar Swiss franc. Pound yen. Pound yen, it was a big drop in pound yen. And now we are looking for a further move to the downside, and 147 will be the target here. In this case, we could see a pullback into that previous pin and then a drop, because that is quite a big drop. And after those large drops, we do tend to see retracement. So that's what I would be looking for, a bit of a push to the upside and then a further drop. So the bias is to the downside. We have a big engulfing candle close here. So looking for a further drop into 14700 for pound yen. Euro yen here, looking for a drop as well. Again, this is a big push to the downside, big, huge engulfing candle close here. And in this case, I'm looking for price to push up and then drop again. So biases to the downside, and that will be the move that I'll be looking for. 13200 will be the first target. 129.60 level will be the second target to the downside. But again, with anytime we have huge moves like this, we do tend to see price retrace a bit before it starts to continue in the direction of the trend. So I would be watching for that, and but the bias is to the downside for Euro yen as well. Aussie yen here, a big drop again, and looking for a further drop here. And the target here, we could probably go even lower here, 82.60 level. And in this case as well, we could see a push up into this previous support and resistance level, and then a drop. and looking for further drop there. So 82.60. So just a quick note about all the yen crosses. We have seen some big drops in the market in the yen crosses, and a lot of it has been flight to safety. So we saw, and a lot of them have also happened in the US session. So it is tied to the stock market. So we are seeing big drops in the stock market. And as a result of that, we are seeing this money moving into safe haven currencies, so Swiss franc, as well as Japanese yen. So those currencies tend to go up when there is market uncertainty, which is what we saw in the stock market. So there's constant flow of money between the different asset groups. And when we see one asset group really taking a hit, the other one tends to go up. That's why we have seen US dollar go up. We've seen Japanese yen, Swiss franc go up because of that, because the US stock markets have dropped a lot. So keep that in mind when you see the US stock market dropping. Take a look at what's going on with Japanese yen. So that's usually the correlation that sort of tends to play out. That's what we were seeing. So now if the markets bounce back, if the stock markets bounce back, that means the yen crosses as well as the Swiss franc crosses will bounce back as well. So keep an eye on those two things as we are trading this week. Any questions about this? Oh, we haven't done dollar yen. Let's take a quick look at dollar yen here. Dollar yen, we are in a range bound market here for the last 3 weeks here, but the bias is to the downside. So I'd be looking for a further move down back into the bottom of this pin here. 107.34 will be the target to the downside. So looking for a further drop in that. This one could probably move lower if we start to see further unraveling. So 105.60 will be the next one down, but we haven't broken this since September of last year. So we would have to be mindful of that. A dollar index, I don't have dollar index on these charts here. So I wouldn't be able to cover dollar index, but we can cover gold for sure. Not all brokers provide dollar index, unfortunately. I think they should, but this one doesn't have it. Gold here. Gold, we had seen railroad tracks last week, so that was a bearish signal. We saw a drop. So especially when we see US dollar go up, gold tends to drop because they are inversely related. So this one here, we see a drop here, and I'm looking for a further drop into 1296.58 back into this area. So the bias will be to the downside. It could push up and do a retest like that. So let's take a look. So the type of move, we could see one of these moves. So the bias is to the downside for gold. Let's take a quick look at oil as well while we are here. Oops. Okay, here's the oil. So oil has dropped quite a bit, and hence we have seen Canadian dollar CAD has gone up because oil has been dropping. So with this one, the bias is still to the downside. So there is room for it to come down further into 55.90 level here. So the move that I would be looking at, so overall bias is to the downside. So let's go to the weekly chart here for a sec. So that's a huge drop. The bias is basically to the downside, looking into the bottom of this range here, 55.90 level. And we could see a bit of a recovery here, either into 61.80 or even into 59.92. And because that's a huge drop. So a lot of times, like I said before, when we have big drops, we do tend to get pullbacks. So I would mark both of these pullback levels and just keep an eye on them, because these are pullbacks do tend to happen after big drops. So the bias is still to the downside based on the weekly candle close here. So looking for price to drop further in oil. But again, I would not, discount these pullbacks. Okay, so that's all for the charts. Anything else? Any other questions here? before we wrap it up? All right, so no other questions about the charts. Another thing I wanted to cover, which I was not able to do on Friday because I was traveling, was our Turning Pro Challenge. So we had talked about the Turning Pro Challenge. We started that last week. So I just wanted to do a quick review before we wrap it up. So let's take a look at what happened with our account in the challenge. So we had talked about trading like a professional. So one of the things that we had done was we had gone over the process that one could follow in order to trade a small account or trade the small account like a professional trader. And in that, there were three main areas of focus for us. First was preparation, second was execution, and third one was review. So those are the three things that we were watching. So let me give you a rundown on what happened with that, with the account that I was trading. So first thing I will just kind of walk through each of the things here and provide a review of where we sit. So the first thing is trading goal. So the trading goal was to make 100 pips per week and to trade the London session and trade 3 days per week. So in terms of the 100 pip per week goal, that was met. So was able to make more than 100 pips for the week, did trade the London session and did trade it 3 days a week. So full marks there in terms of our review. For the rules, I did follow the risk management rules. Most of my trades or all of my trades were 1.5 mini lots. So the account size was only $3,500. So that's why it was very important to manage the risk. So a lot of them were, or all of them were 1.5 mini lots because I was taking more than one trade at a time. So I did maintain the risk, kept the risk small. I did go over 3 mini lots at one point because the opportunity was there and I had just basically scaled into my trade. So that was more of a managed risk that I took. But overall, I did stay within the risk. And I did trade with stop loss and I did not have, or I stopped or I didn't have more than 3 losses in a row. So I followed that. So that was good. Trade management, there was one time, so I did have stop loss and take profit in place when I entered the trade. That was good. There was one time that I did not follow. I followed this rule, but then I moved my stop back to where it was just because there was a lot of volatility in the market. At one point, there were 3 different speakers on at the same time between Fed and Brexit and something else. So while trading the London session, I had moved my stop to break even +2, but then I ended up moving it back to the original, and then the stop did get hit because volatility came back into the market. So under those circumstances, it would have been better to just leave the stop at break even, or I should have just taken the 20 pips. However, I did end up moving the stop back. So next time, it would be better to just leave it in place and potentially maybe re-enter the trade if the opportunity sets up again rather than moving the stop back. So that's one thing that does need to change going forward. Next thing, in terms of preparation, did the daily market analysis every night, which is part of the trade room that I do. So that was good. Looked at the technical levels to trade from, again, part of the trade room that I do. So that was good. Looked at the news every day and created a trade plan. So all of that, I would say full marks there. And one thing that I did not do, and I do need to do this better, is write down these ones here. So I was not writing down or answering these questions properly every day. So I did do the analysis, but I did not write down these questions. So that's something that I need to add on. And in terms of marking the trades, I was creating notes in Evernote and putting down charts and stuff as I was taking trades. So that was good. Trade log was being maintained I should say trade journal was being maintained, which is good. So that was all good. I do need to do a better job of the market analysis. So that will be in my improvement list where I need to improve. And one thing that I would say I failed on was market review. I did not do the market review like I intended to. So that one I got 0 marks for because I could have done a better job at doing the market review. So in my trade journal here, you will see my entries and comments, but I did not. I don't have a review in here. So that's where I need to, I would say, got 0 marks here for daily review as well as weekly review. And this is where I need to do a better job of consistently doing the market review. So that will be on my improvements list for next week. So completely 0 marks there. And our checklist was good. So now let's take a look at where the account stands. So we started off with $3,500 in the account, and now we are at $4,540. So this was success. My goal was to make $300, so hit the $1,000. So I'm ahead of my goal. And in terms of the profit loss, so there was $1,000 in profit. So we are ahead of the game in terms of the actual account. And the two things that made a difference, a couple of trades that I took, the yen trades really played out. And I only traded the yen the first day that we were actually we saw the big drop in the market. These were not trade room trades. The rest of the trades were the trades that I took in the trade room. These set up outside of the trade room hours in the US session. And generally, I don't trade the US session. I just happen to be in front of the chart at that time when the trade set up. So I was able to capture those. On Friday, though, I did not get into any trades, and there was very good opportunity to short the yen crosses just because I was traveling. So I was not in front of my computer to manage the trades. So all in all, I would say a good week. And we'll keep doing these reviews every week. So this one was good week. We're ahead of the target. So we'll just continue on with them. Part of this challenge is to just make sure our behaviors are correct. We are not just looking at the results, but behaviors that will give us the results. So if you haven't signed up for this challenge, you can sign up, and the link you want to use to sign up. So basically what you can download those worksheets that I have to follow along. So you can go to tradingwithvenus.com/turn pro to sign up for that. And that's where you would get all the worksheets. So in terms of the number of trades, I usually take 2 to 3 trades a day. That's my number. I don't like taking too many trades. I did scale in on Friday, but overall 2 to 3 trades is what I tend to take on any given day. And if you wanted to, so those trades are also provided in the trade room. So if you wanted to sign up for the trade room, or if you want to learn more about the trade room, so basically we start off with the weekly market review, which is what we are doing. But in the trade room, or when you join me, you also become part of my private Skype group where I share my trade ideas and analysis. So we do a daily market analysis call, similar to what we are doing here every evening. So we look at fundamental and technical analysis, and we mark the levels where we are likely to see the trades from. So those levels you can either trade yourself, but I also provide my trading signal. So you can, I will basically, when I enter the trade, I post that where I'm entering the trade, where my stop loss and take profit targets will be. Those are during the London session that I do. And then every Friday, there's a members only webinar that we have, which is more of an educational webinar. So you get education as well as the market analysis and signals. So it's more of a comprehensive service. You also get my pivot point indicator once you sign up, because that's one of the indicators that I do tend to use, and I find that very, very beneficial. So you get that, and the cost for that is $97 a month. You can go to tradingwithvenus.com/trading-signals to get it. Or I've been I've been getting asked by a lot of people as to if there are other options for signing up. I was only doing a monthly one, but I'm offering a couple of other packages now. So if you wanted to just sign up for like 6 months at a time, then you get a better price for the trading signals. It will be $67 a month if you sign up for a 6 month term, or if you want to sign up for a yearly term, then it's only $47 a month. So those are the couple of different options that I have just added for trading signals. And for all of them, it's the same service that you get, except that one is monthly. So if you just wanted to go month to month, and the other ones are more for term-based services. All right, so that's all I have. Any other questions before we wrap it up? Okay, perfect. So I don't see any more questions. So we'll call it a wrap. You guys have a wonderful trading week, and I will see you again next week then. Bye for now.